Good afternoon. This is Todd Horwitz coming in from the floor of the CME Group in Chicago. And as we look at live cattle, or we'll call it fat cattle, what do we see here? It looks like the panic is over. You know, a couple of weeks ago, we had that major panic to the downside based on the tariff activity, based on the trade wars, and really more based on the banks. And of course, what we look here for is the banks are the key. They are the ones that typically will panic and force liquidation late in a cycle when markets are near the bottoms. This is not an old story, a new story. This is an old story. This has happened for years. When they're lending you money, they say, hey, we're getting a little bit concerned, so we're gonna puke it out here. And of course, I think that tied in with the trade war talk and the tariff talk was the real crowning blow, which pushed the fat cattle down to about 97. Of course, now we're trading around near the 105 level. Of course, we're buyers at 103. We think that we're going to see a minimum of 110, 111 here before it's all said and done. And I know everybody's concerned about the backwardation that we see, the low prices compared to April. But this is very typical this time of year. You should typically see June and August as low prices. Everybody's worried about the wall of cattle and the hook space and everything else that's going on. We look at the money flow, and of course, we look for cattle to start to rally. So we're going to be buyers if we can see a pullback back to 103. That has been the new level as we've been looking to be buyers all the way along. Look for this market to take off, especially if we can see some equity sell-offs. In the meantime, be a buyer at 103. That's the way we see it. This is Todd Horwitz coming to the floor of the CME Group in Chicago.